What's going on, everyone? Welcome back to Effortless Investor, the channel where we prove you don't need a massive salary or tens of thousands of pounds to start investing. In today's video, I'm breaking down exactly how much my £2.4 thousand dividend portfolio paid me in January 2026. Real numbers, real holdings, no hype. I'll show you how the portfolio performed overall, what I bought and sold this month, how my growth and income picks are doing, and of course we'll look at who actually paid dividends and how that compares to previous months and years. If you're a beginner investor, investing with low capital, or just curious what a small, realistic dividend portfolio can actually produce, this video is for you. Let's jump straight into the portfolio update. Starting with the portfolio growth as a whole, as it stands right now, the portfolio is sitting at £2,417.93, which still feels slightly unreal considering how modest this all started. For January 2026, the portfolio is up 1.3%, which works out to a gain of £33.07 for the month. Nothing explosive, no fireworks, just a calm, sensible start to the year, and honestly, I'll take that every single time. Zooming out even further, the total unrealized gain on the portfolio is now 10.71%, or £232.91. That's money I haven't locked in, but it's still a solid reminder that time in the market has been doing some quite heavy lifting behind the scenes. What I really like about this is that it's a much better start than this time last year. I'll throw a graph up on screen now comparing January 2025 versus January 2026, and you can clearly see the difference. It's not about racing ahead in January. It's about starting the year on the right foot and not immediately tripping over your own shoelaces. Now, let's check in on how this portfolio is doing compared to the plan, because having a goal is great, but actually tracking it is where things get interesting. Based on my long-term projection, at this point the portfolio was meant to be up around 7.5%, which would put it at roughly £2,123.32, a gain of about £123.32. That projection is built on a very simple plan, starting with £100, then adding another £100 every single month, all the way until I retire. No heroics, no lottery tickets, just consistency and patience. In reality though, the portfolio is currently sitting at £2,417.93, with a total gain of 10.71%, or £232.91. So at least for now, we're running comfortably ahead of schedule. Not sprinting, not celebrating early, just quietly ahead, which is exactly where I want to be. This graph really highlights how small monthly contributions, given enough time, can start to compound faster than you expect. And just to be clear, this doesn't mean I'll always stay ahead. Markets wobble, months turn red, and that's all part of the deal. But right now, the plan is working, and that's a very nice box to tick. So let's talk about what I've been up to this month. And honestly, it was a pretty simple one. One sell, one buy, no frantic button mashing. Starting with the buy, this month I picked up 13.5 shares of Ondas, ticker symbol ONDS, for a total of £120.51. This is very much a long-term conviction play for me. I like the space they're operating in, I like the potential, and I'm fully prepared to sit on this one for at least a year, maybe longer, and let it do its thing. Best case, we get a growth wave similar to what I've experienced with Palantir in the past. Worst case, I give it time, size the position sensibly, and let the thesis play out. Now, to fund that purchase, I did make a sale. I sold 20.69 shares of ARK Innovation, ticker symbol ARKK, for £128.22. That worked out to a £7.60 profit, or a 5.71% gain, since I started investing in it a few months ago. Nothing dramatic here, just a calm, adult exit. The main reason for selling it is that I've realized EQQQ fits my aggressive growth style better, and there isn't really much point in holding both when they're trying to do similar jobs in the portfolio. So rather than overcomplicate things, I trimmed ARKK, locked in a small profit, and recycled that capital straight into Ondas. Simple moves, clear reasoning, and everything still aligned with the long-term plan. So with the portfolio currently a little ahead of plan, let's zoom in and see where that growth is actually coming from. This brings us to the effortless investor growth pie, the part of the portfolio that's built to grow steadily in the background while I get on with my life. For January 2026, the growth pie delivered a return of 0.9%, which translates to a gain of £15.69 for the month. A solid, unspectacular start, and honestly, that's exactly what I want from this section. Looking at the individual holdings, starting with VWRL. In December, VWRL put in a strong performance with a 1.17% return, and overall it's now up 11.64%, which is a gain of £118.36. Steady, it's dependable, and doing its job nicely. Then we have EQQQ, which had a quieter December, returning just 0.07% for the month. But zooming out, it's still leading the growth pie overall, up 14.31% or £59.79. Together, that puts the overall performance of the growth pie at 12.39% or £177.70. The result of letting different assets take turns carrying the momentum. As always, this pie also received its usual £65 investment from the £100 deposited this month. No clever moves, no guesswork, just consistent contributions and patience. It's a very unexciting way to invest, which is exactly why it works. So while the growth pie is quietly doing its long-term compounding thing in the background, let's switch gears and look at the other side of the portfolio. The part that's meant to earn its keep a little more visibly. This is the EI income pie, where dividends matter, stability matters, and the occasional surprise, good or bad, is all part of the fun. For January 2026, the income pie returned 3.2%, which works out to a gain of £18.47 for the month. That's a very respectable start to the year for the income side of the portfolio. Overall, the income pie is now up 7.5% or £40.40. And on top of that, the total dividends received by this pie now sit at £14.19, which is exactly what this section is here to do. Let's break it down holding by holding, starting with JGGI, which was up 0.82% in January, and overall is now sitting at 4.85% or £6.58. Nothing dramatic, just steady, dependable progress. VHYL had a strong month, returning 3.21% in January, and overall it's now up 11.06%, or £14.61. This one's been quietly doing a lot of the heavy lifting. BAE Systems absolutely woke up in January, posting a 16.71% gain for the month, bringing its overall performance to 13.76%, or £3.77. Possibly helped along by global headlines, defence spending chatter, and let's call it geopolitical enthusiasm. British American Tobacco continued its surprisingly solid run, up 4.2% in January and now 17.88% overall, or £4.43. Not flashy, but very effective. BT Group gained 3.38% this month with an overall return of 7.42% or £2.07. Slowly but surely crawling in the right direction. HSBC had another strong month, up 9.48% in January, making it 2 solid months back to back, and pushing its overall performance to 25.58%, or £6.68. This one has really found its stride recently. Now for the less glamorous bits, because no income pie is complete without a few crumbs. TSLD fell 10.31% in January and is now down 11.71% overall, or £3.37. Not ideal, but the position is sized accordingly and it continues to earn its place through income rather than price action. JEQP dipped slightly in January, down 0.1%, though it remains up 4.57% overall, or £1.21. Very much a one step back, two steps sideways kind of month. JEIP had a tougher January, down 1.21%, and is now sitting at minus 0.22% overall, or 6 pence down, which in portfolio terms is more of a shrug than a problem. Legal and General moved up 2.43% in January, bringing its overall return to 8.46% or £2.37, solid and very on brand. National Grid had a strong start to the year, up 7.68% in January and now up 15.58% overall or £4 exactly. Reliable, predictable, and doing exactly what I want it to do. And finally, Unilever, which slipped 1.22% this month and is now down 6.55% overall, or £1.84. Not great, but also not something I'm losing sleep over, especially given its long-term role in the portfolio. All in all, a very mixed month. Some stars, some stragglers, but the income pie is growing, paying dividends, and doing exactly what it was built to do. Now, shifting gears slightly from steady income to something with a bit more spice. Let's talk about Ondas, ticker ONDS. Ondas is a very new addition to the portfolio. I only invested on the 25th of January, so this is very much an early days check-in, not a full review. Since January 1st, the Ondas share price is actually up a pretty eye-catching 46.22%. On paper, that looks incredible. But here's the important bit. Because I only bought in near the end of the month, I didn't capture most of that move. As of now, my personal return on Ondas is a much more modest 0.61%, which works out at about 74 pence. And that's completely fine. I'm not here to chase what's already happened. I'm here for what might happen next. This is a long-term conviction play for me. I'm happy to hold it for at least a year, and I fully expect some fairly dramatic ups and downs along the way. For now, Ondas gets a very simple verdict. Too early to judge, but firmly on watch. So if Ondas is the new arrival that we're still getting to know, then Rigetti Computing is the portfolio's resident reminder that the market can be a bit unhinged sometimes. Rigetti has been in this portfolio for a while now, and despite slightly underwhelming January, the bigger picture here is still pretty good. For the month, Rigetti was actually down 1.66%, so not exactly starting the year with fireworks. But zoom out just a little. Overall, Rigetti is up a ridiculous 143.99%, which translates to a gain of £14.37. And this is why I always say context matters. A red month doesn't undo a strong long-term move, especially when the position size is sensible and the expectations are realistic. Rigetti is very much a high-risk, high-volatility holding. This was never meant to be a smooth, predictable, or comforting. It's here to swing, sometimes wildly, and so far it's done exactly that. Could it give back some of those gains in the future? Absolutely. But for now, it remains one of the clearest examples in this portfolio of why patience and a strong stomach can occasionally pay off. So with the growth performance out of the way, it's time for my favourite part of these videos. Let's talk about which assets actually paid me this month. January isn't usually a blockbuster month for dividends. It's more of a slow nod of approval than a standing ovation. But this year, it's definitely showed up a bit more life. Kicking things off, JEIP chipped in 14 pence, followed closely by JEQP with 20 pence. Nothing flashy, but both doing exactly what they're meant to do, quietly working in the background. National Grid came through with 34 pence, which I always appreciate. It's not exciting, but it's reliable, and that's the whole point. SMIF added 38 pence, continuing its steady contribution to the income side of the portfolio. And then we have the heavyweight for the month, TSLD, which paid out a very respectable £1.39, doing a lot of the heavy lifting in January. All in, that brings my January 2026 dividend income to £2.45. Now here's where it gets interesting. Back in January 2025, this portfolio paid me just 3p. Not £3, not 30, 3p. Fast forward 1 year, and we're at £2.45 for the same month. That's not luck, that's consistency, time, and boring monthly contributions doing their thing. I'll throw a quick graph up on screen now so you can see that jump visually, because honestly, it still makes me smile every time I look at it. And while we're on graphs, let's zoom out a bit. What you're seeing now is every month of dividend income since I started investing. And this is where the bigger picture really starts to matter. Some months are quiet, like February at 15p, or March and May around 40p mark. Although I should specify that February through May have yet to produce their second round of dividends, as I only started investing in June of 2024. Nevertheless, other months have so far stepped up, like July at £4.35, October at £4.06, and then December absolutely stealing the show at £9.22. It's not smooth, it's not predictable, but over time the baseline keeps creeping higher, and that's exactly what I want to see. Small portfolio, uneven months, but a very clear long-term trend in the right direction. Now, before we wrap things up, let's do a quick monthly roll call and hand out the unofficial portfolio awards, because not everything can be a winner every month. Starting with the best performing asset for January. This one goes to BAE Systems, which put in an absolute shift this month with a 16.71% gain. A huge move for a traditionally steady income stock, and a clear standout in January. Whether it was defense spending headlines, geopolitical noise, or just the market deciding it was BAE's turn in the spotlight, it didn't just walk to the top of the leaderboard, it sprinted. On the other end of the spectrum, we have the worst performing asset of the month. That honour goes to Unilever, which slipped 1.22% in January. Not a disaster by any stretch, but it also didn't pay a dividend this month, which makes the red number sting a little bit more. Now it's worth adding a small but important footnote here. TSLD technically had the worst performance from a pure price perspective, but it also delivered the largest dividend payout of the month. And that's exactly why I look at this portfolio as a whole rather than obsessing over individual red or green numbers. Some holdings earn their keep through growth, others through income, and occasionally they swap roles when you least expect it. January gave us a bit of everything, and honestly, that's not a bad way to start the year. And that's a wrap for January 2026. This month reminded me, and hopefully reminded you, that investing doesn't have to be flashy or frantic to work. Sometimes the magic happens in the quiet, consistent, and slightly boring steps we take month after month. We've had some highs, a few lows, some surprises, and a whole lot of little wins that add up over time. And that really is what effortless investing is all about. Patience, perspective, and a plan that doesn't require stress or guesswork. If you enjoyed following along, found it useful, or just like watching a small portfolio quietly do its thing, make sure to hit like, subscribe, and ring the bell so you don't miss any future updates. And if you're new here, welcome. Consider this your reminder that even modest contributions, small portfolios, and steady consistency can really move the needle over time. Thanks for watching, and I'll see you next month for the February update. Same place, same relaxed approach, and probably a few more surprises along the way. As always, keep it simple, keep it realistic, and keep it effortless.